What's going on, my friends? Today I had two trades and I went 2 for 2 on them. They were both in opposite directions, so I had one long and one short. And what I wanted to talk about today was at least how kind of my higher time frame analysis and trends works in with my lower time frame executions, and just kind of what I was thinking about today. And we have been, if you watch any of my other videos, I've been saying it for the past couple of weeks, we have been on a bull run. And it has been just a series of like pretty significant run-ups and then consolidations, run-ups and consolidations. But today, and I want to say the past couple of days, we've been kind of looking like we're in the middle of consolidation, looking like we're going to break out. But today did something interesting, which may or may not have been a turning point for us as far as heading downwards, maybe for a more significant higher time frame pullback. But today, my first trade was actually a long, which in the context of the higher time frame was, lower time frame and higher time frames being in sync, which in my mind makes for a safer trade. And then my second trade was a short, but we'll go over that in just a second. So this long, I didn't want to play in the beginning of the day today because right off of the bat, we ran up and then consolidated. And I think I was pretty busy this morning. We had some contractors doing some work in our house, and when I got to the charts, I was in the middle of this, and I didn't really want to play. I didn't want to play any breakouts or any shorts, so I just sat and watched. And I'm glad I did, because this was absolutely crazy. Like the sell-off afterwards, I was expecting maybe a big sell-off, maybe to a pullback to like a 79% retracement. Ended up going 100% and then even deeper. So kind of an interesting to see that sell-off and how hard that was. But what that kind of showed me is, like, at least on a lower time frame, it made me think that we may be shifting, at least for today, to kind of a downtrend, and there's a possibility, if this continues, to turn into a higher time frame as well. So that's the context a little bit. My thought process here is I didn't want to trade that until we had some semblance of structure. There is no structure when it's just straight down. And so I'm just keeping an eye. I'm just watching it all the way down, nothing showing up. A small order block came in here. But what I was looking for, and don't be distracted by this, I actually didn't have this charted prior, which I charted this after I took the trade, so this is kind of misleading. But that order block is a 5-minute order block from the pre-market. And so it kind of worked out perfectly, in hindsight. But what I was looking for, my first thought process is I'm not willing to go long on these tiny little, I don't even want to call them pullbacks, but these green candles. I'm not crazy about trading those in the long position. What I was looking for was probably the first significant bounce or pullback out of this whole trade. And that happened right about here at like 1687. What that signifies to me, number one, is that there's probably a lot of sellers that at least caught a portion of it. But what it looked like they were doing was this is a 100-point drop, right? And I think this is just profit taking to me. It looks like profit taking, and then probably several bulls that are like, hey, I'm tired of this. Like, let's long and let's keep the bull trend going. So that was my thought process, but I did like how significant this was. It was a nice big pullback, a lot of green candles, showed that there are buyers and or people taking profits, which means that the selling process in my book is starting to slow down. That's originally why I didn't take any trades in this position. I wanted to see how strong it was going to be. And then this has been a trend. I think my most recent video, I took almost the exact same trade here, right? So it was the original bounce, and then it was a retracement back from that original bounce. So with the fib level, let's change that to regular fib. So from just this leg right here, what we're looking at is pretty much almost perfectly a 78.6 or 79% retracement on this. So that's what I'm keeping an eye on. The retracement on this original move to look for an entry long, and that's exactly what I did. It looked like we were going to have some support here. We had a couple of decent wicks, so I took my risk. this was 1 NQ long, and I set my original stop loss below this low here. This seems to me like the most recent and intact low that I could be as like a solid stop loss. We hadn't really put in a formal low here, so I wasn't just gonna throw an arbitrary stop loss here. I feel far more comfortable with an intact low stop loss here. And my original target was actually VWAP. So this is on the 1 minute chart, and so I was originally targeting VWAP. Just because after a huge sell-off, I don't think we were gonna retrace super deep. That wasn't my original thought. My original thought was, let's retrace to the volume or to VWAP and see the reaction there, and then I can adjust based on that. It's not a huge, I mean, I think this trade was 2.5 risk to reward ratio, just over 2.5 risk to reward. So I felt really comfortable about it. I didn't think it was reaching too far, and I was just letting it play out. And I felt a little bit slow around this level here. Again, the lower time frame, like the 1 minutes, the 5 minutes, I don't even know if a 5 minute, at least in the 1 minute, the very low time frames were showing a red trend or a bearish trend. So at this specific moment in the 1 minute time frame, I had no idea how we were going to react. So I actually took profits right about here, which was originally the plan was to take profits at that moment when we got to this high. I gave it a little bit of time and then realized I just wanted to get out. I ended up making $490 off of one contract here. So this was a pretty good play. Had I stuck to my guns and just let the trade run out, I would have hit my original target. And, it is what it is. You're not going to go broke taking profits. But again, this is, I think, a well-executed trade. This is not in trend with the lower time frame. This is in trend with the higher time frame, which again I feel more confident with. But I think the best trade would be taking a long position within a higher time frame bullish trend and a lower time frame bullish trend. So I think what I was missing here was the lower time frame confirmation and the lower time frame actually being bullish. But I'm glad I got out when I did, and I understood that yes, I am going against at least the immediate lower time frame trend, so that I may need to take profits quicker, and I might not necessarily hit my targets, which I did in this case, but I still like to have that in the back of my mind. But that's what I'm thinking. I'm longing against the lower time frame. The higher time frame is still bullish, but overall, just happy with the execution, and I would say overall, a pretty solid trade. And then as we progress throughout the day, I feel like we finally found another bottom. This bottom down here around the overnight low, which I had at like 1638 or 1640. So we found a little bit of support there. We put in a couple of 1 minute higher lows along the way and some higher highs. So definitely regaining a little bit of bullish structure, which is pretty awesome. But first things first that we had to contend with is a pretty significant 5 minute fair value gap that I had charted from the 5 minute chart. This is obviously pretty significant, especially since it lines up roughly with this consolidation here, the break above, and then another huge sell-off down here. So this, in my mind, especially considering the lower time frame that today we're just selling off hard, that it is probably more likely that your 5 minute, your 15 minute fair value gaps are going to be respected. And it turned out that was the case. Now, I did like this in particular because what we had this run up from the bounce, and then we danced around the lower end of the fair value gap. I like that. It's showing that it is being respected. And then we're also, in this time frame, we're also building up a lot of liquidity on both sides here. So what I think is really interesting is we have sell side liquidity building up down here. Let me zoom in. So we had sell side liquidity building up down here for people trying to long. And then we had buy side liquidity building up here for people trying to short. So what's really interesting is that there was a quick liquidity grab here, very tiny, but it's going to stop anybody who had a long position that got long here. It's going to stop them out. because where's the most likely place that these people are going to be putting their stops? Right below here. So this down candle stopped them out and then immediately turned around and grabbed the buy side liquidity, which stopped anybody above here, above this high, these highs, this high right here, stopped them all out and then dumped. So I liked what happened here at the 5-minute fair value gap. It's showing that we are continuing in the downward direction, and that these fair value gaps, or these supply zones, however you want to look at them, are being respected. And I ended up getting in a little late. I was pretty confident about this in the downtrend going with that lower time frame. I was pretty confident with it, but not confident enough to get a decent entry right up here. I was a little late to the party, but either way, my original trade I entered at like 16,082, and I had my stop loss not in a great position. But I entered here because I set my parameters, my brackets to a 2-to-1 right off the bat. And on this trade, it was actually 2 contracts. And I set my original stop loss at a $500 stop loss and my original target to about $1,000. So it's flat 2-to-1 risk to reward ratio. I set it at 16,057. And I should have let this one play out. Especially since I was so confident in the downtrend continuing. Again, today I've been kind of in and out of the charts. I was like working with contractors, taking care of my daughter, getting lunch. I mean, I really should have had my mind here, but I was a little bit distracted. So I did end up exiting the position, not because I didn't have faith, but I had to go take care of other things. And this is on an evaluation account for Top Step, and I'm pretty close to passing, and I just wanted to take profits. Again, you're not going to go broke taking profits, so I ended up taking $360 here, and I just walked away for the day, and that was my last trade. But what's really interesting here is that we still have the higher time frame being bullish. This one was with the lower time frame trend. So interesting that neither one of these trades had higher time frame and lower time frame in sync. I think that's why I exited early on both of them, just because, again, being able to hop into a trade and being able to have your 4 hours, your 1 hours, your dailies all lined up heading the same direction, there is a certain level of confidence that you can have in your trade to just set it and forget it and walk away and just trust that the probabilities are on your side, the trends are on your side, the higher time frames, the lower time frames, you name it, it's on your side. Today, I was taking profits early because at one point or another, my first one was only aligned with the higher time frame analysis, so and not the current trend. And then this one was not aligned with the higher time frame analysis and only aligned with the lower time frame. So both ways, I'm not upset. I was taking profits, and I came out today with like a $700 win, $750 win. So I'm not going to complain, but it's important to recognize and keep your trade within the context of these higher time frames and the lower time frames, and just take all that stuff into consideration. So that's all I have for you today, and I'm just happy to be out green, and I'll see you guys next time. Peace.